Welcome back to 4X JumpStart, Chapter 4, the bonus round, the Market Barometer. The Market Barometer is one of our customized proprietary indicators made available to all of our all-access members. It is essentially an indicator of relative strength. Measured on a scale of 0 to 100, it plots each individual currency's strength or weakness. We can see here each currency, not currency pair, floats freely against all the other currencies, 8 in total. Trade rules. To the long side, we should wait for an individual currency line to cross below and back above the 30 oversold level. To the short side, we should wait for an individual currency line to cross above and back below the 70 overbought level. Create the currency pair and appropriate trade by going long that currency that again has crossed back above 30 and selling short that currency that has crossed just back below 70. For example, on the following chart we can see the Japanese yen or yellow line crosses above and back below 70, indicating an appropriate time to sell short the yen. The New Zealand dollar or red line crosses below and back above the 30 level. Therefore, the appropriate trade of going long the Kiwi and shorting the yen would give us a trade of the long Kiwi-yen pair. In regard to stops and limits, longer-term trades typically require larger stop and limit orders, whereas short-term trades require smaller stop and limit orders. Generally speaking, short-term trades based on a short-term market barometer or 1-hour charts should apply a 25 to 50 pip stop and limit order. Medium-term trades based on a medium-term or 4-hour chart market barometer usually require 50 to 100 pip stop and limit orders. Long-term trades based on a long-term market barometer, also daily chart market barometer, usually require between 100 to 200 pip stop and limit orders. For example, we can see in the following example, the Kiwi yen did in fact reverse back to the upside as our stop was never touched and the market reversed back to our resistance level and in order to take profits. In constructing a currency pair, if the market barometer calls for a trade in a currency pair that does not exist, we can create a synthetic trade, such as the following. The market barometer calls for the trade to buy the Kiwi and sell short the Swiss. Well, if we do not have access to the Kiwi-Swiss pair, we may simply buy the Kiwi dollar and buy the dollar-Swiss pair. The net result would give us long Kiwi, short Swiss, and flat or no position in the US dollar. Additional tips. Look for additional confirmation through the technical levels in the charts, such as support, resistance, and Fibonacci levels. These are still very important. Wait until the crossover actually occurs. Don't anticipate the reversal. Back above 30, back below 70. Wait for the crossover. Note the time of day. Markets tend to break out during active market hours and stay in a range during quiet market hours. Maintain a trading log and wait for the trade. Entry is everything. Market openings are as follows. New York market opens 8 a.m. Eastern, Japanese market 7 p.m. Eastern, and London at 3 a.m. Eastern. The market tends to become active near the opening and remain active for the first 2 to 3 hours of every trading session. We thank you very, very much again for joining us, and please remember that all of our all-access members of 4Xlounge are given access to the market barometer and many of our other customized indicators, and it can be yours too. We thank you very much for joining us, and we hope to see you soon, real soon, inside the 4Xlounge.